There's a new kind of customer showing up in 2026, and it isn't a person. It's an AI agent, a bot that shops and pays on its own. OpenAI, Amazon, and Google are all racing to build it. You tell the AI what you want, and it goes out, picks the product, and checks out for you. No human clicking buy. That's already rolling out this year. And here's the part nobody is putting on the sales page. When a bot does the buying, a bot can buy wrong. And when it does, somebody has to pay. If you run any kind of business, that somebody might be you. Stay with me because this one is going to hit small businesses first. Let's get clear on what this is because it's bigger than a chatbot. The industry calls it agentic commerce. A chatbot answers questions. An agent takes action. It picks the product, it adds it to the cart, it enters the payment, and it completes the order, all on its own. You say, find me the cheapest case of printer paper and order it, and the agent just does it. The whole selling point is that there's no human in the loop. That sounds great when it works. The problem is, what happens the moment it doesn't? Because now a machine is spending real money in your name. And this is not some far-off idea. It's live. Amazon opened up product feeds so merchants can send their items straight into its AI shopping experience. OpenAI built a whole checkout protocol for buying right inside ChatGPT. Google is in the race too. Every analyst covering this says the same thing. Agentic shopping starts scaling across 2026, this year, right now. So you're going to have AI agents showing up at your online store, or your booking page, or your order form, acting on behalf of a customer you never actually talked to. And you need to understand who is responsible when that goes sideways, because the answer is not what most owners assume. Here's how tricky this is. OpenAI rolled out a feature to buy things right inside ChatGPT, and then, in early 2026, they quietly pulled it back. They scaled down instant checkout and started routing buyers back to the store's own website instead. The most advanced AI company on Earth tried to own the checkout and found out it was harder than it looked. Now think about that. If OpenAI, with all their money and engineers, had to hit the brakes on automated buying, what do you think happens when a smaller, cheaper agent is set loose on your order page? The technology is moving fast and breaking things, and the breakage lands on the businesses on the other end. Now let me give you the one idea that makes this whole thing risky. When a person clicks buy, the decision and the payment happen in the same second by the same human. With an AI agent, those two things come apart. The agent makes the decision at one moment, and a card gets charged at another. And a human may never have looked at the specific order at all. Lawyers who cover this point straight at that gap. It gets a lot harder to prove who actually authorized a given purchase. And when you can't prove who authorized it, every dispute, every refund, every chargeback gets messier. And it usually rolls downhill to the merchant. So what does going wrong actually look like? The example the lawyers keep using is simple. An AI agent hallucinates and orders 5,000 units of something instead of 50. It misreads the request, picks the wrong size, or stacks the order on itself. If you watched our McDonald's and Taco Bell episode, this is the same failure, just moved from the drive-thru to the checkout page. The AI is fast, it's confident, and it has no common sense to catch an order that obviously makes no sense. A human would stop and say, wait, 5,000? Are you sure? The bot just places it. And now there's a real charge, a real shipment, and a real fight over who eats it. Here's where it gets ugly. When an agent buys wrong, there are three parties, and all three point at each other. The user says, I didn't tell it to do that. The AI company says, read our terms, we're not responsible for what the agent decides. And the merchant, that's you, is left holding a charge that's being disputed. Regulators in the US, the UK, and Europe are all still writing the rules for this at the same time, which means right now there is no clean answer. It's a gray zone. And here's the thing about gray zones in business. They get settled by whoever has the coverage and the contract to back them up, and whoever doesn't ends up paying. And this is the trap I really want you to see. When liability is unclear, the money doesn't just disappear, it lands on whoever is least able to fight back. The legal teams call it becoming the default deep pocket. The big tech platforms have armies of lawyers and terms of service written to protect themselves. The customer can just dispute the charge with their bank. So when an agent buys wrong and nobody can cleanly pin the blame, guess who's left? The business at the end of the chain. The shop, the supplier, the service provider. That's you. Being the smallest party in the deal means you're the easiest one to stick with the bill. Now you might be thinking, I don't run an online store. This isn't my problem. Stay with me, because this hits from two directions, and almost every business is exposed to at least one. Side 1. You sell something, and AI agents start buying from you, and the disputes and chargebacks start piling up on orders no human ever confirmed. Side 2, and this is the one people miss. You start using an AI agent yourself to order supplies, book travel, restock inventory, and it buys the wrong thing on your account with your money. Most owners haven't thought about either one. By the end of this, you'll know exactly what to ask before you let any of this near your business. Let's take side 1, the selling side. An AI agent places an order on your site. You ship it because an order is an order. Then the cardholder disputes it and says, I never authorized that specific purchase. My agent did that. And the card networks already lean toward the buyer in a dispute. So now you've shipped the product and you're losing the payment too. You eat the chargeback. One of those is annoying, but picture an agent glitching across a busy weekend or a wave of disputed agent orders during your peak season. That's not a nuisance anymore. That's a real hit to your cash flow on sales you thought were already in the bank. Now, side 2, the buying side, and this one is sneakier. Say you save time by letting an AI agent handle reordering. Restock the supplies, rebook the regular travel, refill the inventory. One day it picks the wrong vendor, or orders 10 times what you needed, or buys something that can't be returned. That charge is on your card, in your business name, and you authorize the agent in general, even if you never approved that exact order. Try explaining to your bank that the robot did it. This is the part that's going to surprise people. The convenience of handing the buying to an AI also means handing it the power to make expensive mistakes with your money. And if you think a business can just blame the bot, the courts have already shut that door. There's a case called Moffat versus Air Canada. The airline's chatbot made up a refund policy that didn't exist. When the airline refused to honor it, a tribunal ruled that Air Canada was responsible for what its own AI told the customer. The airline tried to argue the chatbot was a separate thing. The tribunal said, no. If the AI speaks for your business, it is your business speaking. Now carry that logic over to agents that don't just talk but actually buy and sell. If your AI acts on your behalf, the law is lining up to say you acted. You own what it does. So let's turn this into the questions that actually protect you, because every piece of this is an insurance question. First, errors and omissions, what we call E&O. When an AI agent acting in your business gets a transaction wrong, that's a professional error, and errors create liability. That's exactly what E&O coverage is built for. Here's the catch. Most small business policies don't include it by default. You probably carry general liability, which covers someone slipping in your parking lot. It very likely does not cover a bad AI transaction. Those are two completely different kinds of risk, insured separately, and agentic commerce lives squarely in the one most owners skipped. Second, the contract. Every AI shopping tool and agent platform comes with terms, and almost nobody reads the liability section. These contracts are usually written so that when the agent fails, the loss lands on you, not the platform. Look for two phrases: limitation of liability and indemnification. In plain English, those clauses usually say the company owes you next to nothing if their agent hurts your business, and sometimes that you'll even cover them. You agreed to all of it by clicking accept. So before you plug any agent into your store or your purchasing, read that section or have someone read it for you. The contract decides who's the deep pocket, and right now it's probably set to you. Third, the policies most people forget. A lot of agent risk lives in cyber coverage and commercial crime coverage, not your basic package. If an agent gets hijacked or fraudulent transactions run through your account, or your payment system goes down during your busiest hour and you can't take orders, that's where you look. But here's the gap. Whether any of those policies actually pay out depends entirely on how they're written, and most of them were written before AI agents existed. The language hasn't caught up. So you can technically have cyber coverage and still find out it doesn't address an autonomous agent making a bad purchase. That's the kind of gap you never want to discover in the middle of a claim. And this is the truth that ties it all together. The technology is moving way faster than the contracts and the insurance policies underneath it. Businesses are plugging AI agents into their buying and selling this year, right now, and their coverage was written for a world that didn't have any of this. Even the regulators admit they're still catching up. That space between what the tech can do and what your policy actually covers, that's the gap. And the gap is exactly where claims get denied and owners get surprised. The good news is you can close it ahead of time. You just have to ask the right questions before you flip the agent on, not after something's already gone wrong. So here's what to actually do, and none of it is complicated. Before you let an AI agent buy for you, or buy from you, ask 3 questions. 1. If an agent transaction goes wrong and costs me, does any policy I currently carry respond to it? 2. What does the platform's contract say about who's liable when the agent fails? Find that section and read it. 3. If my payment system goes down or fraudulent agent orders hit, does my cyber and business interruption coverage actually cover that? 3 short answers, 1 conversation. And that conversation is a whole lot cheaper than finding out the hard way after a wave of disputed orders is already sitting on your books. My name is Dennis Hendrickson. I'm a licensed insurance broker in Sarasota, Florida, and I work with business owners on exactly this kind of risk: AI exposure and commercial coverage. If you're even thinking about letting AI agents buy or sell in your business this year, and a lot of you will be, it's worth 15 minutes to make sure your coverage caught up to what you're actually doing. My contact info is right down in the description, and the first conversation doesn't cost you anything. And if this was useful, subscribe. Every day we break down a real AI and business story and what it actually means for your bottom line. The practical version, not the hype. I'll see you tomorrow.